Here are a few key takeaways from Fibonacci analysis that I want to make sure that we remember. The first thing is calculating the sequence. How are we coming up with these levels? Understanding the math, I think, really helps with that. It's really not complicated math. It's really simple addition, division, and multiplication. But I think it's important to know the foundation of where these extension targets are coming from. Also calculating those extensions, recognizing where the tops and where the bottoms are in these consolidations to allow us to set these extension targets, whether it be the 161 or the 261. The retracement levels, when markets are trading counter to the underlying trend, we want to be able to anticipate where the market is going to perhaps run into resistance or find support to the downside when it's correcting an uptrend. And then finally, it's when they cluster together. When you have a Fibonacci extension from a longer term time horizon and a Fibonacci extension from a shorter term time horizon, clustering together at the exact same level, the market is probably going to respect those areas a lot more than levels with just one extension.